What's up? It's Yo Yo the House Lady. Thank you for stopping by my channel where I kick it with you about all things real estate, investing. You know, right off rip, I gotta let you know that this is not intended to be financial advice. It's not intended to be legal advice. You must do your own research, assemble your own team of professionals when you're endeavoring to take on a real estate transaction, be that a realtor, a real estate attorney, a tax professional. Just definitely gather your own team of professionals to consult with throughout the transaction process. Now, I wanted to kick it with you today about something that I hear all the time. You know, I keep my trusty whiteboard right next to me, so I'll be glancing over from time to time. And please don't forget to comment, like, and subscribe. Now, let's get into it. I get random questions on a daily basis. I probably talk about real estate, if not every day, every other day. So whenever I tell somebody that I'm a real estate investor, I would say that unequivocally, the question that I get the most is it a good time to buy? I probably get this question at least 5 times a week. So I wanted to address that today. So the one thing you have to do as a real estate investor is you have to switch hats. So as real estate investors, a lot of times when we first start out, if we've owned homes before, even if we're renters, it doesn't matter, either or, whether you're a renter or a homeowner. We think like a renter or a homeowner, and you really have to switch hats and think like a business professional and think about buying and selling properties as your business. And the reason why I point that out is when we buy properties as end users, traditional users, meaning a person who just buys the house out of emotion. You buy it because it's your first home, it's your neighborhood that you're from, it's where you want to raise your family, you're nostalgic about the neighborhood, and you just want to own a home there. The bottom line is it's your primary residence, and that's what you buy the house for, to live there. That's an emotional attachment. But as it pertains to us as real estate investors, there's no emotional attachment when we buy and purchase. It is about the deal. Is that property going to cash flow? Is it going to make you money? Putting it quite simple. Is this property going to make money for me? So the things that you have to consider as opposed to what a traditional homeowner or a renter would consider is, number one, is it going to be a positive cash flow? So it doesn't matter whether you're going to be, or whether you've decided to be, whether you've decided to be a landlord, which means you're going to use the BRRRR method. You're going to buy that property, you're going to rehab it, you're going to rent it out, then you're going to refinance the property, and then you're going to do the whole thing all over again, which is the repeat aspect of the BRRRR method. Or you're going to buy and flip, which means you're just going to buy that property, then you're going to rehab it, then you're going to put it right back on the market so that you can gain the profit from that property. Or there's also investors who just purchase properties and they know that maybe something is happening in the neighborhood and this neighborhood is on the rise, so they hold it for the appreciation value in that property. So no matter which one of those aspects you're considering, no matter which one you choose to do, or whether you do all three, it doesn't make a difference. You never have to ask about time again, because your goal is not about time. Your goal is about doing your analysis and making a determination of whether this property is going to be profitable for you. And the reason why I even wanted to address this today is because I know sometimes when you're just getting started, you wonder, am I doing this at the right time? Is the timing right? Because you hear so much about timing when you hear people talking about the real estate market. Oh, is it a good time? It's a great time. It's a seller's market. It's a buyer's market. So you're wondering, well, where do I fit into all of that? And I'm telling you, you step outside of all of that chatter and you look at that chatter for just what it is. It is for the traditional home buyer, the person that's going to live there, not for you, the investor. Now, I'm not saying that certain time frames don't affect you. When interest rates are high for everyone. They're high for the traditional homeowner and they're high for the investor as well. But it doesn't make a difference as it pertains to that. Your focus is no matter how high interest rates are, no matter what the market is doing, is this is this property going to yield a profit? So right now, if you have your ear to the street at all, what you're hearing is it's a seller's market and sellers are getting multiple offers. You hear traditional home buyers and users, the people that I mentioned that are going to buy that property just to live in it, you hear them saying, oh, when I put an offer on a property, I'm always being outbid because the seller has so many offers and the offers are going so high. They're more than what the seller is asking for, so they're bidding over asking price. You'll hear that a lot. Let me just say, right now, as it stands, that is absolutely true. You're also hearing that interest rates are on the rise. As a matter of fact, before yesterday, we were only speculating to when it would happen. But as of yesterday, the Fed has decided to raise interest rates. And if I'm correct, the Fed decided to raise interest rates by 0.25%. So that just means it's more expensive to borrow money now. It's more expensive for the end user. It's more expensive for the investor. Regardless, it's still not something that you have to consider that would keep you out of the market and moving forward to purchase a real estate, an investment property. What we're also hearing is that property values are steadily increasing. And yes, they are steadily increasing. So what you'll find is because interest rates have gone up, property value increases are going to begin to slow. But I want you to understand what I mean when I say that. They're still on the rise. Property values are still on the rise. But because it's going to start to be, or should I say as of yesterday, because it is now more expensive to borrow money, that will taper. I don't know when. If somebody tells you that they know when, it is mere speculation. We just have to watch what the market is doing. From the market analysis that I'm aware of, property values are going to continue to go up, and there is no indication right now that that property values are going to come to a standstill. They're still steadily on the rise. So you're hearing all of these things and you're wondering, well, when do I get in? Do I get in now? Do I wait? I am telling you, when I say you never have to ask the question again of whether it's a good time to buy, as a real estate investor, it's always a good time to buy. The question for you is, does this property, or should I say, will this property cash flow? If the property will cash flow, if the property will yield you a return on your investment in the time frame that you set for yourself, it's a go, go, go. So there's no reason that you ever have to ask that a question again, because like I said, it's always a good time to buy. It's your girl Yo-Yo, the house lady. Thank you for stopping by.